Welcome back to Fast Money. Shares of Voyager Technologies tumbling almost 15% today. The defense and space company last night giving its first earnings report since its June IPO. Voyager reporting a wider loss in the second quarter than a year ago. Revenue did rise 25%. Shares of Voyager rocketed 82% on its first day of trade, but they've given back a lot of those gains. The stock now up just 10% from its offer price. Now, for more on the earnings and the outlook, let's bring in Voyager Technologies Chairman and CEO Dylan Taylor. Dylan is also a commercial astronaut who was on a Blue Origin New Shepard mission. And Dylan, it's great to have you on. So I guess just talk through the quarter, what the street might have been seeing here, and break apart your guidance for us.
Yeah, well, actually, we thought it was a great quarter, notwithstanding what the stock did today. We did beat on revenue, as you pointed out. We also raised full-year guidance, and our EPS and adjusted EBITDA was actually in line with analyst estimates. I think there were a couple of AI-generated headlines that showed a miss on adjusted EBITDA and EPS, and that was not correct. So who knows if that moved the stock at all or not. But, you know, the core business is growing very rapidly, and we're augmenting that with accretive M&A. So we feel very, very good about the business, actually.
What is, on the defense side, what are the sort of key priorities and I guess sort of the signposts for your kind of achieving them?
Yeah, so on the defense side, we are part of Golden Dome, which I think has been in the news quite a bit. And specifically, the big program we're on is called Next Generation Interceptor. And that's really the premier missile defense shield for the United States to protect us from hypersonic missiles from adversaries like China and Russia, nuclear-tipped hypersonic missiles. So it's a no-fail mission, no kidding, no-fail mission. And our technology is really integral in that program working. It just recently passed a key technical milestone called critical design review. And so that really opens up the aperture for our technology to be on other programs as well.
Great revenue growth. The margin pressure comes from integration, it looks like, and sort of scale-up costs, which theoretically should go away over the next couple of quarters. So if you think about it through that lens, how do you see the acceleration in margins going forward?
Yeah, no, great question and great insight. So we're highly acquisitive. We've made 8 acquisitions since our founding. And as I mentioned, that high organic growth rate will be supplemented with accretive M&A. So we anticipate a lot of operating leverage in the business. Also, our product mix is changing. Part of the revenue drop-off in one of our segments called Space Solutions was we were actually giving up a low-margin contract that we didn't want to keep, frankly. So anticipate M&A and other organic growth initiatives moving into higher margin product mix. So we'll benefit from additional operating leverage as the revenue scales, but we'll also benefit from better pricing and better margins overall.
And what are you looking to target in further M&A at this point? I mean, I assume the kind of space-related startup, private market arena is pretty busy right now. But what areas look the most ripe?
It is pretty busy, but, we offer something unique, right? So who are the other buyers out there? It might be a private equity firm. For a lot of these founder tech-led companies, that's not an interesting opportunity set for them. They don't want to sell to a financial sponsor necessarily. In a larger strategic, let's say an aerospace prime, that's not necessarily a win for them either to be a badged employee at a large, 100,000 employee company. So we actually provide a really good opportunity for them to be part of a bigger platform, a bigger mission, but yet still be entrepreneurial, flexible, adaptable. The area that we really like is signals intelligence. So in addition to that propulsion technology I talked about on Golden Dome, we also do a lot of signals intelligence, and this is really mining data and providing actionable results for intelligence analysts. And this is a very, very bullish market, high growth. And so I would anticipate we'll make additional M&A in that. And, of course, it's an obligatory buzzword I have to throw out there, which is AI. But this really is enabled by AI because you're processing a ton of signal data. And what you're trying to do is create actionable answers that you can transmit to the client. So AI actually figures very prominently.